Ladies and gentlemen, welcome to today's show. We are your 3 Bucks, Eric, Teej, and B. So guys.
Yes, sir.
Hey.
Welcome to the show.
Have you been out in fast food recently?
You have. I haven't. I haven't really had any. But then again, I just came back from Put in Bay, and I had a lot of it all at once.
Okay. It comes out now. Oh, I haven't had it in a while, but this weekend.
Well, I wasn't really... He deflects to me like, oh, you have. and then the truth comes out.
I had an abundance of it this weekend, but then I haven't had it in, honestly, I don't eat fast food at all. So, but I had no choice if you're on an island.
Yeah, when you're on an island, you got to eat fast.
That's right.
Well, Wendy's is offering free food to compete with McDonald's, apparently. Apparently not enough people are walking in to eat their fries.
Apparently the picky tails may no longer be doing it for the customers. Not too happy about her picky tails.
Actually, I was thinking maybe it's not the food that's chasing customers out. It might be those new logos that are being displayed in the UK that are a little bit more emo.
Oh gosh, yeah, I've seen this. The UK expansion of Wendy's. They got the little swoosh of the hair. The pigtails are gone. No more old-fashioned hamburgers.
Yeah,
new age
she's more edgy now.
Yeah.
Are they doing that to target a new audience?
It's got to be. It's got to be something to do with, obviously everything going on with inclusivity and
just trying to be super hip with it, and change the look up a little bit.
Yeah, if you haven't seen this, just Google it. Wendy's UK expansion. You'll see all of their new logos, and it's quite out there. But Wendy's is used to ribbing us online. You know what I mean? They're always, if you look at their Twitter, they're always giving heat on people on Twitter. They're always trying to break the internet any way they can. So this isn't really new for Wendy's, trying something new and out of the box.
I could view this as maybe them throwing the towel in. I'm just saying, normally a company, if you want to draw in your target audience, you get better food.
Yeah, exactly.
And they've always competed with McDonald's and said, we have better fries than McDonald's. Meanwhile, they have to compare themselves to their giant.
I know McDonald's always gets the rub in all of their advertisements, all the commercials. It'll say, our fries, 4 out of 5 people say they like them better than McDonald's.
So they realize they're like, you know what? We can't compete with McDonald's, man. Let's just rebrand.
Let's just do art.
They're trying to throw, they're kind of like Netflix, right? They're throwing stuff at the wall to see what sticks. This is one of them with the new hairdoos on Wendy. Although I don't know if it's even Wendy at that point when you go through the driveway.
Well, one of them looks like you could be, driving through Wendell's.
Yeah, looks like, yeah. Can I take your order? This is Wendell.
It's more of a got to be glued kind of looking do. Extremely spiked.
Maybe this is Wendy's entry into NFTs, apparently, huh?
Well, that's the thing. They are always trying new things. And I noticed that they're opening up the Frosty Village in the Metaverse. So they're throwing stuff at the wall. They're really trying.
Yeah, but they should really be taking notes off of the giant McDonald's because they are coming out with new food.
Ba-da-ba-ba-ba.
The Japan curry rice. They must have heard. McDonald's, not only are they a global company, but they're a charitable company. And they're a kind company. They must have heard about the restaurant that sunk in Japan. They came out with, the results are in, the Japan curry rice meal.
Correction, I think that restaurant was in Hong Kong.
Hong Kong? Hey,
is that not in Japan?
Yeah.
My dude. But it's okay, we'll forgive you for that. Because at the end of the day, we got some curry rice with our Big Macs.
Curry rice, man. Can you just imagine? Now, of course, this is in Thailand right now, but could you just imagine going up and going, I'll have a Big Mac combo with some curry rice? And then, can you imagine your bathroom visit after that digest?
So spicy.
I was going to say, it sounds really good to me. I'm a curry rice fan.
Fast food goes right through me, but you throw in some spicy curry rice in there too.
Whew. Ooh, that grease. Oh. That grease and that spice together.
That grease and that spice together.
Yeah, but they're always trying different twists on meals. They get the McRibs. They're always willing to try some things outside of the box.
Different kind of creative chicken that's probably not chicken.
Yeah, because obviously they don't have to worry about their branding.
They lead the pack.
They're trying to get their way into the metaverse as well, because I know that they've done some licensing for like McCafe in terms of trying to get use of it in the metaverse. I heard Panera is trying to do that as well. So everybody's trying to get a stab into the metaverse. But if you're trying to do it through Meta, be careful, because Meta is suing Meta. That's Meta. No, literally, the company's called Meta.is. So when I say Meta is suing Meta, I'm being legit. Of course, this is a really small company, but yeah, they're trying to sue Meta right now. They feel that the toxicity of Facebook is rubbing off on their brand. So, which, there's some
What's
toxicity.
crazy to me is why, so it's almost like they waited for it to be an issue to do something about it, but why didn't they sue like way back when Facebook decided to transition to Meta, if you will? You know what I mean?
It's probably when they started seeing an overlap into like their sales, or maybe a shortage of sales, because people were assuming that what their product was had something to do with the big guy Facebook.
And Meta is so small. I mean, from my understanding, it's so like to sue a giant like Facebook, it's a bit intimidating.
Yeah.
In the business industry, the companies are always competing for landscape, constantly competing. Sometimes there's even overlap. I mean, look at this weird scenario that we have coming up between Disney and parent company Comcast, which owns Universal Studios.
Yeah, so the famous Simpsons ride at the Universal Studios park, when they set this deal up, don't. They set that ride up, back in 2008, and it was a 20-year deal that they made with Fox. At the time, that's who owned The Simpsons. But now you'll notice that The Simpsons is on Disney Plus, and so it kind of creates a little bit of a conundrum because Disney probably wants Homer Simpson and Marge walking around with Mickey Mouse at Disney World, but they can't because of their 20-year deal that they set up with Fox. So 2028 is when that deal comes to an end, and it's speculative that the Simpson ride may not be there after 2028 because Disney, has been trying to take a lot of stuff in-house, like they've been doing, taking their stuff off Netflix and so on and so forth.
Yeah,
so
they're not afraid to strip away any material from another company.
But it's all about brand recognition. But I just think the Simpsons brand has kind of waned in popularity, in my opinion. I mean,
yeah, but it's a landmark. It's just been
Yeah,
there
I think that's what
forever.
it
It
is.
just has its place.
But what's crazy is when I think Simpsons, I don't think Disney. I think Fox.
yeah.
You know what I mean? Like growing up, I always watched it on Fox.
I think what you just said actually probably helps Disney. That's probably part of the reason they want it, is because it makes them feel larger than just themselves. You go to the Disney park and you're going to see the Simpsons there, and you just said, man, it makes me think of Fox. So you're going there and you're basically seeing everything.
Yeah, but God, leave some crumbs for the rest of us. I mean, they already bought 20th Century, like Fox's movie division.
Hey man, when you drop crumbs, Mickey Mouse comes and grabs and eats it.
I suppose so,
Draws
man.
mice.
Like, geez.
They're not playing around. They don't just eat your crumbs. They'll take your
They're
whole
really not.
entree.
They'll just absorb everything.
We have a lot to discuss. Let's jump into the woods. We have earnings and the Vinnie Mac attack with WWE. Let's go. Ooh, financial advice.
No, not financial advice. Strictly educational and entertainment purposes only.
Ooh,
Entertainment.
Yes.
This week's impacts on your Daily Buck. In NFT news, dun 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 dun. Discovery Shark Week swims into TVs with NFTs available for participants, partnered with Nifty. How nifty. Just do it. Nike and Artifact partner for hoodies for their avatars and physical wear woven in with chips, not potato, but to link to your digital piece of art. In stock market news, Netflix only down about 1 million subs. Well, that relieved investors with a focus on other ways they can charge us more money via ad support and password sharing fees. I'm learning to fly, but I ain't got wings. But Delta does after they struck a $13 billion deal with Boeing. YouTube becomes the new home shopping network after a new deal with Shopify is made to integrate into YouTube. Great, more ads, seeing a theme here. Snapchat whoosh, snaps the market with the weakest ever quarterly sales growth. Oh snap. Earnings week part 2. The big guns are out. We got Microsoft, Google, Meta, Amazon, Intel. I didn't drink enough water to say them all, but there's more. In crypto news, Bitcoin flipped its 100-day downward trend, bit by bit. See what I did there? Tesla didn't, because they got rid of 75% of theirs. And lastly, the crypto markets ran last weekend with Ethereum and Matic up 5% in a day. That's almost enough to pay your sales tax in Michigan. This and more and how it impacts your daily buck.
Let's go ahead and discuss the trends in the market indices. A case of the Mondays.
Yeah, it's slower start. Monday blues. They're kicking in.
To this point, the return for all three indices was relatively flat. The Dow had a return of positive 0.28%.
Woo!
Right? Oh, yeah. The NASDAQ had a return of negative 0.55%.
Boo.
And the S&P 500 had a return of 0.13%. All three of them really not even fluctuating within a percent. OpenSea volume last 7 days, up 21.39% from the week prior, and about 180,000 traders made a transaction. Still some pretty decent volume in the NFT space.
There's still some activity. I will say from the indice standpoint, definitely much slower. 5-day trend we had last week, man. Things were all looking green.
I think the way they started this week is very cautious.
Oh yeah.
You know what I mean? With what we have coming up.
Rightfully so.
Huge earnings week though, so it could be explosive by the end of the week, downward or upward.
And you have a massive convergence, right? You have the earnings meeting the Fed on July 27th. Everybody's kind of just creeping very slowly.
Holding their breath.
Yeah, no, it's a huge week. I mean, a lot of the companies that report this week are actually some that weigh pretty heavily on the indexes that we just discussed. So it's almost like either the calm before the storm or, okay, I mean, I guess the storm could be a good or a bad thing, right? The calm before the storm. That's what we're at right now.
It's just all about your perspective, right? Some people love the storm. They like going to bed, sleeping with the window open, hearing the rain hit. I'm one of those guys, just waiting to pounce on my next move.
So, Teej, do you think this Wednesday we're going to have a nice summer stormy night where you got the windows open, you hear the rain trickling down, and you're getting some good sleep? Or is there going to be some sirens coming through because there's a potential hurricane or maybe even a tornado coming?
Take cover in the
knocking at your
basement.
door.
Maybe you're riding a moped and you're stuck under a bridge.
Oh my God, that would be horrible. Just praying under an overpass.
I might be the guy praying under an overpass on Wednesday for the stuff that I am invested in already, but could be a big Black Friday sale if you want to look at it from that angle.
Yeah.
Let's play it this way. If you had to say red or green by week's end, Teej, what do you think? Red or green, without any thoughts? We'll say for the S&P.
I'll say yellow, flat.
This guy. We can't get a single word
I'll say
answer
flat.
out of him.
Give me the third answer.
Eric says red or green, and he's like, I'll say yellow, flat. Come on, man. Red or green. On Friday at market close. Do we have a great week, or are we really questioning whether we want to have an episode next week? Because it's that bad.
You know, I'll say that I'll say it's going to be red, but I don't think it's going to be as deep red as some maybe speculate that it will be.
What about you, B? Red or green?
I always put my neck out there for this show, and I'm putting my foot down as well. My hoove. I'm going green, baby. We're finishing green. I don't know what it is. Maybe it's just optimism or just downright silliness or foolishness. But
he's still excited because Matic was flying last weekend. I think the euphoria still hasn't rubbed off yet.
I told you, my day will come.
You legitimately weigh a big aspect on how I'm going to feel about the market. I was going to say green. I'm officially changing my answer to red. I think we're going to finish red. I do the inverse of what B does.
Fair enough.
Doing an option call.
We got two reds and one green. Fair enough.
Well, which one are you most looking forward to this week out of the earnings? Let me ask you that. Out of the list of what we have a lot of big guns. We mentioned in the Daily Buck, we got Google, we got Meta, Amazon. We even had some stocks that don't really have big movement, like Waste Management, Kimberly-Clark that makes Kleenex, consumer defensive stuff. I've noticed the financials are still holding up strong. But what do you think? What are you most looking forward to?
There's a few companies. I mean, all of the big tech companies I'm looking at. You got the Apple, Google, Amazon. I'm really interested to see how Amazon does. But I also see Tilray on there. That's something I'm invested in. So I have vested interest that they do well or put out good earnings.
Well, I, wink wink, have my eye on Intel.
That is a wink wink for future reference, huh?
That is a wink wink, yeah. No, I just think that, every week I try to focus on sectors to try to get an idea. I'm just trying to absorb information, and it just seems like the semiconductor sector's been down for a period of time, and I think that with the chips bill, that they might get some rub. Well, what about you, Teej? What do you have your eye on this earnings week? Big week.
Well, you know me. I look at some of the boring ones out there. I am looking at Sherwin-Williams because I am invested in Sherwin-Williams. Part of that's because they paint paint. and there's been a lot of housing sales, and I know the housing market's cooling off, but I think that'll be like maybe next quarter. So I think they may have a strong quarter. That's where my gut says. But it could be one of those things where they go, we had a great quarter, but now the housing market's cooling off. Poor guidance.
Yeah.
Stock tanks.
Yeah, we mentioned that just part of the show is like, had we thought that Walmart was going to perform as poorly as they did, because they seem to be, more of a consumer defensive, non-discretionary stock, if you will. People have to get their toiletries and grocery shop, and they were very underwhelming.
Yeah, in fact, their underwhelming guidance going forward of Walmart is sent shockwaves to Costco, Target, Etsy, a lot of these retailers online in the after-hours trading.
Come on, guys. Forward guidance, you just have to sell things. Just sell stuff. Sell toilet paper.
Yeah, true. I mean, there's got to be some sort of baseline. Like, I'm sticking to the fact that I think it's very much under promise, over deliver going into the end of the year. Could be very, very bullish.
Yeah, you give the poor guidance now, and then you over-deliver. Right.
And then,
that's right.
Well, didn't Tesla just do something similar, but like within a quarter? Didn't they cut the expectations?
Yeah,
of earnings or something like mid-quarter? But
yeah, that was the convolutedness of the Tesla report. Yeah, they adjusted their forecast, so that when they were able to beat their forecast, because they were dealing with shutdowns abroad. Yeah, that's right. So
kind of actually makes me think of Netflix, right? Netflix, they lose subscribers, but yet the stock goes up.
Yeah, I mean, it's almost like we said last week, like, hey, Netflix doesn't want to do anything anymore. Here, Microsoft, take care of our ad services.
I can't wait to see Disney's report out in early August, or it was like mid-August, because I'm wondering if those 1 million subs that Netflix reported lost, if Disney was like, yeah, I'll just take those. Here, give me those.
Yeah, right. We'll take those.
It's like Netflix is looking at it and they're like, man, we didn't hit our goal of 2 million lost subscribers. So
yeah, like we didn't lose enough. Like
we need to find a way to expedite this.
How did we not lose enough subscribers? What can we do to lose more? Let's offer an ad service and get to 2 million next quarter subscribers lost.
Well, given that investors rallied off creating an ad-supported platform, it's making me think that, what do you think if we add ads to the Thre3 Bucks podcast? You think we gain subscribers? Or do you think we lose a following off that?
Yeah, man, maybe our viewers would love to have a lipstick commercial or something.
Hey, if you like that, then let us know at $3. We'll be happy to insert some more lipstick commercials into our podcast.
And DM us. We'd love to hear from you.
Well, you know what? On the topic of smooching, people were smooching and kissing their crypto wallets last weekend when crypto went on a run with Matic, Bitcoin. I mean, all of them.
Oh, yeah. Pure euphoria on the timeline again, if you will.
B was blowing up my phone. I told you.
Oh, stop.
I told you like 12 episodes ago. I told you it would happen.
Hey, man. I was clout chasing. I had to get any little piece I can at this point.
Yeah, man. So you had Matic, you had Ethereum. They were up 5% in one day. I think it was on a Sunday. Bitcoin this week, they flipped their 100-day downward trend. I know they were down a little bit. They retraced some of it on this Monday, but still, there's been a resurgence.
Yeah, I mean, I think it gave a lot of people like a renewed hope that's transpired in the space. Although I will say a breakdown from here probably just simply means this move was
a fake out,
a bull trap. Yeah, you know what I mean, like a little relief rally in a macro downtrend.
And the thing is like there's been some correlation between Bitcoin and the Nasdaq. I think people are just being cautious this whole week. In fact, I actually expected a bigger drop on Bitcoin when Tesla announced that they got rid of 75% of this, because Elon, right? And he's like the king of crypto, and it's like, oh God, here we go.
I really did too. And I thought that was going to be the narrative. I was waiting for the bottom to fall out. I really, really was. I thought, okay, that was going to be, the official dump that everybody, quote unquote, has been waiting for. And it held up really well, thankfully.
The one thing I've noticed that's interesting is I'm with Coinbase. On Coinbase, they do these learn and earn gimmicks where they pay you like a different tokens just to take a little quick quiz. I haven't gotten a new one of those, and I wonder if it like is a red sign. A red alert,
like a red flag to
red,
like the
a
SEC
red
or
flag
something.
Because with all the other companies, Coinbase is still holding strong, but I'm like, are they? Because I haven't gotten a learn and earn, and I always take those like every 2-3 weeks. There's always another new one out there, and they haven't put one out in a while.
I'd be careful next time you do it. Just make sure you read carefully. It might be like learn and return. Maybe they're taking some of your money.
Yeah, like learn and burn all of your funds.
Close your eyes. Smell that?
No.
Can you taste that?
Taste what?
Can you feel that?
Ooh, I feel my hand clicking like, follow, subscribe to the $3, and it feels so good.
Let your voices be heard. The $3 on Spotify, Twitter, YouTube, and more.
You're fired.
Donald Trump?
You're retired. Or you're hired.
We're talking about the WWE wrestling. Yeah, Vince McMahon. It's everywhere, right? There's a big scandal of hush money that's been allegedly paid out to former WWE employees by the chairman and, well, I guess former chairman and former CEO Vince McMahon. He's led the WWE for 40 years now. Big news this past Friday was he abruptly announced that he was going to retire strategically right after the market closed at about 4:05 p.m.-ish Eastern. But it's kind of big because Vince McMahon, nobody ever saw this guy stepping down. Just thought he'd probably die in the ring someday. And here he steps down abruptly. He is only over creative, over the television, because he had stepped down temporarily from CEO and chairman during the scandal or the investigation, appointing his daughter to take his spot. Here we are. Today, on Monday, the WWE stock, everybody was kind of looking at it going, what's it going to do? Is it going to tank? Because its captain is no longer there. Here, it rallied up to 10% at one point. I think it closed around the 8% level, but that's still big for WWE.
This has to be linked to Triple H being announced as being part of creative, right?
I got 2 words for ya.
Suck it.
Triple H. That came out shortly earlier this morning was that former wrestler Triple H from the infamous Degeneration X from the Attitude Era of the WWE was announced as the head of creative. So Vince McMahon is no longer in control. Co-CEOs is Stephanie McMahon and a Nick Khan.
We saw this coming, though. I mean, in the 90s, Vince would do all the things he was doing with this hush money, but he'd just do it on live TV, and it was acceptable. And then he lost that outlet.
Oh,
no one could kiss his butt anymore. Like, you know, you couldn't get like people naked.
You know what's crazy to me is I saw, and I could be mistaken, but what doesn't make any sense to me is that he was paying the hush money out of like the company's expenses. Like really, like really,
he wasn't all
how
that
hush are you
discreet.
trying to be? Like if you're just openly like writing it off to the company's expenses, hush money for Deborah.
Allegedly he was, but yeah,
Just a write-off.
And we speculated that I think the original amount was 12 million, and we thought there was a possibility that that amount could continue to increase as more and more information came out. And sure enough, I think is like 14.6 million now. Last I heard.
That's what we heard.
Well, the investigation's still ongoing, so I think that might be the reason for the abrupt departure, because it's like if there's still more to go, he might know that there's still more skeletons in the closet.
I mean, so how far do you think this goes? Do you think he can face some sort of indictment or some sort of charges?
If it's not paid out of your personal and it's paid through the company, then that means you're misreporting during earnings where some of that money's going.
You're
right?
you're actually underreporting your earnings to that point. If you're increasing the amount of expenses, he's doing his shareholders a disservice by.
Has he been cutting back the dividends?
Did you say a share hose a disservice?
He's been doing those shareholders a disservice.
The whole train.
That's what this is about. This is his share hose.
Hey, well, aren't you a shareholder in the WWE stock?
No, I will be transparent to say that I usually do flip the WWE stock right after their November Survivor Series pay-per-view, and I ride the hype train from their January Royal Rumble right on through to April's WrestleMania, and I sell like right around WrestleMania season.
Yeah, it sounds great in theory, but I feel like every time I talk to you about it, like when you're in the moment, you're like, man, why'd I do this? It's just moving too slow.
I mean, except for Friday, right?
Except today. Today's the day.
Today was the movement.
Today was the big movement. Yeah, where it bounced.
Oh, that's right. He announced it after Friday's close.
Yeah. So, but there's speculation. I mean, you WWE, they're publicly traded, so they have a lot of big publicly traded partners like Fox, which hosts their.
Yeah, you were saying maybe the heat was on from these other companies.
There's speculation on that. There could have been pressures that we don't know about because Fox broadcasts their SmackDown, and then we have Comcast that broadcasts their Monday Night Raw and NXT programs. So there could have been outside pressures, and obviously everybody rallied today on the excitement of Triple H taking over the head of creative.
Yeah, I mean, and especially nowadays, like your franchise player, like the face of the company, has to have almost like a pristine reputation.
No more Stone Cold Steve Austin and middle fingers and drinking beer and bra and panties matches. We can't have those anymore.
No, nothing like that.
No, come on. If Stone Cold stepped up,
it's disgusting.
It would go through the roof. People would go wild.
Give me a hell yeah. But it also opens the door for the insider wrestling fans, the smarter fans that you go on a lot of the dirt sheet websites. There's been speculation about buyout rumors of the WWE for the last couple of years. Comcast is shelling out a lot of money for television right fees for their SmackDown program. I'm sorry, for their Raw and NXT program, and then they took the WWE network in-house. So in their the new co-CEO, Nick Khan, he has mentioned in the past that they'd be open for bids or kind of open for business, but they weren't looking at selling at the time. Now that he has more stroke, it opens that door. It's like, man, what does Comcast want to keep shelling the money, or do they want to eventually see if this Fox SmackDown deal falls through and then Comcast just swoops in? Who knows? I mean, it's a streaming war, right? So you want more content, and we already talked about earlier how Comcast is competing with Disney with the Universal Studios stuff, and this would be a win if a company like Comcast could own the content of a company like WWE. In the end, I'll tell you what, I'm rooting for them. I'm rooting for WWE, and that's the bottom line, because Teej said so.
Ooh, I see what you did there.
Hunt of the week. Markets are steady.
Knees weak, arms are heavy.
Vomit on my sweater already.
Japanese curry.
Investors nervous, but on the surface, your bucks are calm and ready to drop stocks.
I got one more rhyme for you. ADBE. Adobe.
Here we go.
Adobe Systems. They closed at $392 at the end of Monday's trading session. They've been as high as $688 in the past year, which is basically split in half. And their current value is back to where it was in June of 2020.
Discounts.
So,
yeah.
Big
absolutely.
discount. And we talked last week, what I'm looking at is trying to get into these bigger, trustworthy companies. They've been around for 40 years. So I want to get into those companies right now at a discount. And what do? They're a software company that they sell their software as a subscription. They work in the creative arts, so they have PDF, Acrobat, Photoshop, or Illustrator. So they have a wide variety that appeals to a lot of these NFT projects, or really any kind of project you have to do on the computer. And where do we see technology going? Forward. We're going to see continued growth. They're expecting 17% year-over-year growth, which is huge.
See it going up.
Yep, this is a long-term play for me, so I'm adding positions here. Swim at your own risk.
Nice. Okay. Sticking to the technology sector, my hunt of the week is Intel. Ticker symbol INTC. They are a semiconductor manufacturer, and most people are probably more familiar with the parts that they build for computers, graphics cards, memory chips. And much like Adobe, their valuation since the start of the year has basically almost been slashed in half. It's been as high as $56. Currently, it closed at $39.20 after Monday's trading session. And one thing that sticks out to me with Intel is they consistently, for the last 4 years, legitimately are anywhere between 70 and 80 billion in revenue and about 20 billion in net income. They're a profitable company and they make plenty of money, but it almost is as if they've become sort of stagnant in what they offer, which is actually why I've chosen them this week with the chips bill coming up and trying to do a lot of manufacturing stateside. They could see a ramp up in sales, and they also just landed a big deal becoming a foundry service for a Taiwanese company. For me, it's probably just a hold until the end of the year. I just kind of want to see. It's almost like a simp play on the chips bill that supposedly should be passed here. They do offer a dividend as well, so while you are hanging on to them, you're getting paid in the event the price does not appreciate. Teej?
Well, I'm going to try to one-up both of you guys, and I'm going to go aggressive this time. I'm usually the boring guy. I'm going to give you exposure to both of those. Now, I will say be careful, because we do have a plethora of earnings with some of these big tech companies. But my pick is TECL. It's actually a triple leveraged technology ETF. Triple leverage means it will go up triple the amount if all the stocks are doing great. It will go down triple the amount if things go sour. TECL does have exposure to Adobe. It does have exposure to Intel and Microsoft and Nvidia and Visa and MasterCard. I mean, a slew of different tech companies. So if you're a techie, then this one might be for you. But again, you have to be careful because this one's triple leveraged. It does pay a one-time annual dividend. It's not much to brag about. It's about 28 cents or 0.80% yield. You get that in December. But this thing, it's got all of the big basket of tech companies in there for you. As long as they're doing well, then this thing soars. And it's been beaten down. So that's why I think it's a good opportunity now versus how it's been throughout the year.
So you got to say all of the holders right now this week are probably holding their breath with all the companies about to report.
Yeah, this is a big week for TECL. A lot of the stocks in that index are reporting this week.
Needless to say, I should be doing some call checks on you all week, right?
Well, this is the thing. You know, there's so many good, valuable tech companies, and without bloating up your portfolio too much, this is a good way to expose yourself to a large amount of those tech companies. But you just have to go in with knowing that there's a risk because this is triple leveraged.
This week ahead, welcome to Earnings Mania. Yeah! On Wednesday, July 27th, we have the FOMC meeting with a probability of a 75 basis point increase. So, watch out.
All right, Bucks, it's hunting time ahead of a new week of opportunities, and stay tuned next week. Anything is on the table, like Japanese curry rice, or even Meta suing Meta, suing Meta, suing Meta, suing Meta. But we also talk about stocks and crypto and NFTs. And thanks for listening to Your 3 Bucks, and connect with us throughout the week on Twitter at 3_Bucks. Have a suggestion? Tweet us, DM us. We'd love to hear from you. Until next week, happy hunting.